Hello and welcome to this January 3rd, 2011 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Sonic Corp, ticker symbol SONC. This is about a $624 million market cap company in the consumer discretionary space. Stock had been downtrending for a while. You can see back in May, June, and into early July, Sonic was moving straight lower, actually bottomed down at about the 7.25 level, made one quick rebound up to the 50-day moving average, and then came back down and retested in mid-September this 7.25 area. Since that time, we've actually been moving up, continuing to print higher highs and higher lows, and look at the volume bars on these moves to the upside. So clearly it looks like there's some accumulation that's been taking place in the stock. You can see here this was actually a flagpole where you pretty much just went straight up almost every day, went into a flag pattern after that flagpole for the next month and a half or so, and then at the end of November broke out above this flag pattern. If you draw a line here, you'll see that this candle actually took that out. Now this flagpole went from about let's call it maybe $7.40 up to about $9.80, so it's about $2.40, and this breakout occurred at about $9.30 or so. So you take on, or you tack on another $2.40 and you get up to about $11.70. Haven't quite made that move yet. We got up to $11 about a week ago before pulling back. So it looks like from this level, which wouldn't be a bad entry point because you're sitting almost right on the 20-day moving average. The 20-day moving average is at $10.11. We finished at $10.12 last week. So you take the pullback, which relieved overbought conditions. You can see the RSI was up close to 80, and we had stochastics at about the 95 area, something like that. Very overbought in the near term. So we did pull back off of those overbought conditions right back to this price support area and also right on the 20-day moving average. So this isn't a bad area to think about getting involved. You've got gap support here that comes in just above 990, so you want to be careful if it closes below 990. A second entry or second strategy could be to consider a partial entry here at the current level and a second entry all the way down maybe at this gap support, the bottom of gap support down around 960. If it were to get there, that would average you in somewhere around the 985 level, and then consider using price support, which is just beneath the 50-day moving average, as the as a stop area. So you could maybe have a stop in on any close below about 945. That would be a second alternative to playing Sonic. From a target standpoint, I think we could run back up and maybe test this $11 area. Ultimately, if we get the breakout, measuring up to that 1170 level that I talked about earlier on this bull flag breakout. So overall, I think the stock looks pretty interesting. The pullback recently, you can see, has been on much lighter volume than what we saw on the way up. So it would indicate to me that we've probably got a better than average chance that we're going to see another push to the upside. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.